the Tesla Cybertruck. A vehicle that has captured the imagination of the world and sparked countless debates. With its bold, futuristic design, a radical departure from traditional trucks, and its promised stainless steel exoskeleton, a feature touted for its durability and unique aesthetic, it has been a lightning rod for attention, drawing crowds and generating buzz wherever it goes. Ever since its dramatic debut, the Cybertruck has been a constant topic of conversation, a symbol of innovation, and perhaps, overambition. It was meant to disrupt the established pickup market, challenging the dominance of legacy automakers. But the road from initial concept to delivering a reliable product to eager customers has been unexpectedly rocky, filled with challenges and delays. Then, in late May 2025, a new chapter unfolded. News broke of a major and somewhat mysterious production pause at Giga Texas, the Cybertruck's dedicated manufacturing facility. This sudden halt sparked fresh doubts and intensified existing concerns about the Cybertruck's long-term viability and uncertain future. The pause also raised questions about Tesla's overall manufacturing prowess and its ability to execute ambitious projects on schedule. Adding to the intrigue, Tesla has offered no official explanation for the production halt, leaving analysts and enthusiasts to speculate. This lack of transparency is fueling widespread speculation about the underlying reasons, prompting a flurry of theories about whether the pause is due to weaker than expected demand for the polarizing vehicle, persistent production issues and challenges in scaling up manufacturing, or perhaps a combination of both factors. The Cybertruck was initially envisioned as a cornerstone of Tesla's next phase of growth, a key player in expanding its market share and driving revenue. Therefore, any sign of trouble or uncertainty surrounding its production and delivery inevitably sends shockwaves through the financial markets, impacting investor confidence. To truly understand what's happening behind the scenes and gain clarity on the situation, we need to take a closer look at the specific events unfolding at Giga Texas, the heart of Cybertruck production. We'll delve into the potential reasons behind this unexpected production pause, examining the various factors that may be contributing to the slowdown. And ultimately, we'll explore what this pause could signify for Tesla's future ambitions and its position in the rapidly evolving automotive landscape. In late May 2025, Tesla's Giga Texas plant went quiet, not just for the Cybertruck but also for the Model Y. Workers were told in advance and given options: use paid time off, do non-assembly tasks, or stay home unpaid. The halt was longer than usual, hinting at deeper issues than routine maintenance or supply hiccups. Both the new Cybertruck and the high-volume Model Y were affected, suggesting a factory-wide or strategic pause. This came after months of fluctuating schedules and tighter overtime controls, pointing to ongoing efforts to align production with demand. The late May pause wasn't an isolated event, but part of a pattern of operational adjustments at Giga Texas. Rumors quickly spread that the production pause was due to sluggish Cybertruck sales and swelling inventory. Reports suggested over 10,000 Cybertrucks were sitting unsold, with some units lingering on lots for months before delivery. The truck's radical design, once a magnet for pre-orders, may now be limiting its appeal at a premium price. Fewer than 50,000 Cybertrucks had been delivered since launch, and the initial surge of early adopters seemed to be fading. Tesla may be forced to cut prices or pursue fleet sales to move inventory, but the Cybertruck's niche appeal could make that difficult. The real question: does demand for this unconventional truck match Tesla's production ambitions? The pause may be a strategic move to let demand catch up with supply. The Cybertruck's troubles come as Tesla faces a tougher financial landscape overall. In Q1 2025, Tesla delivered 336,681 vehicles, a 13% drop from the previous year, breaking its streak of relentless growth. Production outpaced deliveries by 26,000 vehicles, swelling inventory across all models. This unsold stock ties up cash and hurts profitability. Net income for Q1 2025 plunged 71% year-over-year, down to $409 million. Core automotive revenue also fell 20%, highlighting the pressure from rising competition and slowing demand. The Cybertruck's woes are just one part of a larger story. Tesla is navigating a more challenging, mature EV market. The production pause hit Giga Texas workers hard, with inconsistent hours and early shift send-offs since February 2025. Overtime was tightly controlled, and even third-party contractors faced layoffs, reflecting broader production slowdowns. In April, Tesla had already cut Cybertruck output, reassigning some workers to other lines. Earlier, a 3-day shutdown in December 2024 was officially for logistics upgrades, but it fueled speculation about deeper issues. These moves show Tesla was already scaling back Cybertruck ambitions before the May pause. For workers, the uncertainty is real, and it mirrors the company's own shifting strategy. The unfolding situation at Tesla didn't go unnoticed by the financial world. Analysts, ever vigilant, meticulously dissected the available data, seeking to understand the underlying causes and potential ramifications of the production pause. Dan Ives of Wedbush, a prominent voice in the tech investment sphere, didn't mince words when assessing Tesla's Q1 2025 results. He characterized them as a disaster on every metric, highlighting the across-the-board underperformance relative to expectations. Ives further warned of a potential brand crisis, suggesting that the confluence of negative factors could erode consumer confidence and damage Tesla's hard-earned reputation. Even Elon Musk, known for his optimistic pronouncements, acknowledged the gravity of the situation, saying, "If the ship of America goes down, Tesla will go with it." This statement, laden with patriotic sentiment and a hint of desperation, underscored the interconnectedness of Tesla's fate with the broader economic health of the nation. Despite the overwhelmingly bad news emanating from Tesla, Tesla's stock demonstrated surprising resilience on certain trading days, defying the downward pressure and offering glimmers of hope to investors. In a particularly counterintuitive move, the stock even experienced a rise immediately following the announcement of the production pause, a phenomenon that baffled many market observers. But when viewed through the lens of the entire year-to-date performance, shares were still significantly down, having shed over 21% of their value, starkly reflecting the deep-seated concerns and anxieties plaguing Tesla's investor base. Tesla's conspicuous silence regarding the specific reasons behind the production pause served only to amplify the existing speculation and exacerbate the overall sense of uncertainty surrounding the company's prospects. The company's established pattern of disseminating information primarily through Elon Musk's personal social media channels or during quarterly earnings calls created an information vacuum that analysts and the media eagerly, and sometimes frantically, rushed to fill with their own interpretations and analyses. This conspicuous lack of clear and direct answers from the company itself has only served to heighten the prevailing sense of unease and apprehension surrounding Tesla's future trajectory in an increasingly competitive and volatile market. In response to slowing demand, a trend that has caught the attention of analysts and investors alike, Tesla has been making some significant adjustments to its pricing and product strategy. These moves are designed to stimulate sales and maintain its competitive edge in an increasingly crowded electric vehicle market. Tesla slashed prices on the Model Y, one of its most popular vehicles, in an effort to make it more accessible to a wider range of consumers. This price reduction is a direct response to the growing competition and the need to attract budget-conscious buyers who might be considering other EV options, and launched a cheaper variant to attract more buyers. This new, more affordable version of the Model Y aims to capture a segment of the market that was previously out of reach, potentially boosting overall sales volume and market share. The Cybertruck pause, a highly anticipated vehicle that has faced numerous production delays combined with falling sales and profits in other areas, signals a turning point for Tesla. These factors collectively suggest that the company is entering a new phase, one where it must adapt and innovate to maintain its position as a leader in the EV industry. If the Cybertruck remains a niche product, failing to achieve the mass market appeal that Tesla initially envisioned, Tesla may need to rethink its strategy, reassessing its product roadmap and target markets to ensure long-term success, and focus on cost control or new marketing tactics. Streamlining operations and implementing innovative marketing campaigns could be crucial for boosting profitability and attracting new customers in a competitive landscape. The EV market is now crowded with strong competitors, each vying for market share and offering a range of compelling electric vehicles. And Tesla can't rely on explosive growth alone. The days of unchallenged dominance are over, and Tesla must now compete head-to-head with established automakers and emerging EV startups. Innovation, efficiency, and adaptability will be key to maintaining its lead. These three pillars will be essential for Tesla to navigate the evolving EV landscape and stay ahead of the competition. The current challenges could be a critical learning period, providing valuable insights and opportunities for growth and improvement. Forcing Tesla to balance growth, expanding its production capacity and market reach with sustainable profitability. This delicate balance will determine Tesla's long-term financial health and its ability to continue investing in future innovations. How Tesla manages inventory, ensuring a smooth flow of vehicles from production to delivery, ramps up new models, efficiently scaling production to meet demand for its latest vehicles, and navigates global headwinds, addressing challenges such as supply chain disruptions and geopolitical uncertainties, will shape its next chapter. The decisions and actions taken in the coming months will define Tesla's trajectory and its role in the future of transportation. The path forward may be slower, requiring a more measured and deliberate approach to growth, but it could also be more resilient if Tesla can adapt to the new reality. By embracing change and focusing on innovation, efficiency, and adaptability, Tesla can weather the current challenges and emerge as an even stronger and more sustainable company.